What is going on? Alright, guys, ignore my messy ass room. Let's go over the trade I took today. So, today is the 19th. It was a Friday. As for the news, we had some FOMC, whatever the fuck. I don't care. Not red, doesn't matter. Not POW, who cares? Came into today. NQ looking pretty bearish. Same thing with ES. More on that in a bit. So, I was like, alright, bet. We're going to be bearish. This is the market open candle. I have 9:30 marked out and also 11. That's when I stop looking for entries. Right here I marked out a 4-hour fair value gap that we formed. We're getting into here. We're filling this right here. I also marked out the 4-hour draw on liquidity. And then I also marked out equilibrium from this range high to the bottom of this candle. This 2 a.m. candle. So yeah, to get equilibrium on that. On the hourly here, we're still bearish, but there wasn't really too many confluences. As market opened, we're already up like above this fair value gap, so there's not really much to do. So whatever, we're gonna be bearish for the day. Coming into the day, I'm watching ES, and I'm also watching NQ. I marked the same kind of stuff out on ES. Obviously, there was no real sweep on ES. There were any like high time frame confluence things, so I didn't take anything. On NQ though, we broke equilibrium. Didn't get the liquidity sweep, but we're still in a high time frame confluence, and with all this bearish stuff going on, I'm really thinking that we're gonna be bearish. So I'm like, all right, bet. In the 5 minute here, after this sweep, I see the break of structure here. All right, it's a valid sweep. Mark out equilibrium from there to there. Mark out this breaker block. Mark out this order block. This order block right here. Price comes down closest below it. And we get a retest. I'm like, all right, bet. Scale to the 1 minute. Now in the 1 minute, I'm like, oh snap. We first of all, where is it? Right here. Right here. There's this doji candle, right? And I gotta stop like doing this shit. There's this doji candle right here, so I'm like, alright, so we're still in an uptrend, break a structure right here. So I enter off of this candle. Basically this candle close is where I enter. I have a take profit down here. My stop losses are at this breaker block, even though this is like ran through the breaker block. Maybe I could have called this something else. Maybe I put my take profit here or whatever. Whatever. I get fucking murked right here. You see this shit? Tried the English or Spanish technique, but I still got stopped out. Coming back into it though, I'm still looking on the 1 minute, and I see that we formed this, this right here in the breaker block, this lower high, and I'm like, all right, well, I still think that there's room for this trade to be bearish, so I, took it again off this candle close basically. And then I had my take profit set here. If I had some balls, I really would have put it down where I have this blue line marked out. This is some resting liquidity right here, and it looks like we actually got to there, so that could have been my take profit, but it wasn't because I'm a loser. Um, Whatever, all in all, it was a solid trade. I stuck to my plan here. I was really tempted to move my stop loss to like get even on the day, but I ended up like just kind of thugging it out. That's what all this like random stuff is marked out here for no reason. I didn't really need to mark out this equilibrium. I didn't really need to mark that out. But yeah, I mean that was a trade. We ended up what is this, 4.34 risk reward? I think it closed. It was like 2,500. Like ridiculous, dude. I hate trading NQ. I much prefer ES because I feel like NQ is just way too fucking volatile, and it's just ridiculous because it's like you get stopped out. That's $600. You get there $800. I feel like I'm over leveraged on this in order to just like have a stop that makes sense. But whatever. We got this short here. Really solid day. I think this is my biggest trading day since I've started like journaling my trades and everything. Which is really really cool. Even though I lost this, it was like $600 here that was like an L trade. Still had the right idea. I just think that my stop loss probably could have been more aligned with equilibrium maybe. Um, I'm not sure. Regardless, my daily bias was right. Everything was correct about the second one that I took. Yeah, maybe I could have had different stop loss. So I wouldn't have gotten stopped out. But all in all, it's pretty solid trade. Probably should have targeted my lows a little bit. Oh yeah, really quickly. I don't know how long this retrace is going to be, but it's really giving me vibes back to in April, and had that retracement in April. What I think is going to happen is we're going to hit equilibrium on this range, this daily range right here, basically. This is pretty beefy retrace. And then I think we're going to hit somewhere around here, probably get down to this liquidity right here, somewhere right here, and just use that as fuel to pump higher. So, I think we're going to be bearish next week, probably for a little bit now, but, who knows? We'll see. Yeah, I mean, that was that. Catch you.